Welcome to this month's Small Biz Virtual Summit. My name is Ken Massa, and I am here with Chuck Boyce. Today, we're bringing on a variety of guests that cover topics and everyday problems that we face within the business world. But our guests are experts in creating solutions to these challenges. And these challenges may be everyday problems that you're facing as a business owner, an entrepreneur, or someone that works in a very amazing business, but you face problems that we all face. Here is a way where you can find those solutions, where you can listen to those who have experienced the same things that you're going through, and even come up with a solution that may work for you. One of the biggest problems that we face as business owners is savings, in particular tax savings. And on top of savings, we struggle with finding the right pathway to building wealth. Today, our guest has decades of experience working with clients to build equity in their wealth portfolios through investments, savings, IRAs, and 401ks. He has worked with thousands of people in this arena and is known as the best-selling author of Passive to Prosperous. We're happy to welcome Dan Zitofsky.
Thank you so much. Thanks so much for having me here. It's an honor to be here, and I'm really looking forward to sharing with your audience and really opening their eyes to what they can do to create some true passive wealth long-term for themselves with ultimate tax savings.
Awesome. We're really excited to hear what you have for us today. I know you have a wealth of knowledge. Chuck has brought to us a wealth of knowledge about everything that you've shared. So I'm really excited to see what you have to say today in your presentation.
Sure. Great. Well, welcome so much, guys. And thanks again for being here. I want to share with you what I work with a lot of business owners on to create not only tax savings, but to use those tax savings to become the bank and to create what's most important, what everyone dreams about, is that passive wealth. Passive wealth is what they call that mailbox money. But more importantly, learning how to do it as a private lender for investors, and how we as real estate investors raise capital from private lenders, giving them better than average returns and treat them like a bank while allowing them to do that with tax savings as business owners. So some of the things about me, who am I? I've personally flipped over 800 properties myself and 2,000, now close to 3,000 transactions. I've personally raised over $30 million and used it in over $400 million of velocity in over 600 real estate doors and mortgage notes. What those mortgage notes are is seller finance notes. I'm also a national speaker and real estate coach. And like you mentioned, I'm Amazon's best-selling published author on Passive to Prosperous. Okay, so what is real estate private lending? People ask. What does it mean to be a private lender in real estate? This is not investing your money in stocks, bonds, mutual funds, annuities, or any of those things. This is where you actually become the bank and you secure your assets and your investments behind hard assets with collateral against those assets should you not get paid back. Now, once again, there's nothing guaranteed, just like the stock markets. I always put that out front. There's no guaranteed investment. And anyone that tells you that, you always got to be careful. And I always say, run, don't walk when somebody guarantees anything. Okay. So what are some of the risk factors involved with lending? Because people always talk about how great it is as a private lender. What are some of the risk factors? Well, you got to look at people's credit. Are they credit worthy? Do they have any judgments or liens against them? Okay, what kind of taxes are owed on the property that you invest in? Because you could lend somebody money on the property and there's taxes owed, and those come before your mortgage. So you could be wiped out with taxes. What is your operator's experience? How many deals have they done? How many years have they been in the business? If they're new, who is their mentor? That's very important to know. And I always say, bet on the jockey, not the horse. Okay, then when you're lending on real estate projects, what is the after repair value of the property? You want to make sure you're not lending too much. And a lot of people that come to you might say, I want to borrow $150,000 on a property, but meanwhile, the property is only worth $100,000 fixed up. You want to make sure that, God forbid they don't pay you, you could take that property back, sell it, and get all your money back. Okay. What kind of renovation scope are they doing on the property? And what does the draw schedule look like? So how much work are they doing on the property? Is it realistic? Are they looking for all the money up front? Or are they willing to take money along the lines in case something happens to them? Okay, and how are they insuring the property for liability and title? Okay, so when we do this, we show our private lenders everything we do to protect them. Because in our world, it's more about how do we protect our private lenders than how do we make our own money. We know we're going to get taken care of. But our rule of thumb over the last 33 years that I've been doing this is always pay my private lenders back first, and I'll make my money later on. And I'm glad to say, thank God at this point, and I don't ever plan on this happening, I've never missed a payment to a private lender in my life. And that's what's kept me in business so long. That's why a lot of people want to invest in my projects. Okay. So some of the things we do is we do detailed rehab and payment analysis on a property. We make sure that we have multiple exit strategies. And here's just an example of a screenshot of a rehab evaluator. Before we actually touch a property, we are the most conservative level of numbers. We make sure our rehabs are overestimated. We make sure our sale prices are underestimated. So we come at you with real conservative numbers. We also have strategies should we not be able to flip a house. We keep that house, we'll rent it, we'll become the bank ourselves, we'll sell or finance that house. We want to make sure that we're covering our assets across the board in any economy, up or down. And I've been through a couple market cycles. If you remember the crash in 2008, 9, 10, I made it through that cycle, did very well. I've gone through COVID very well because I always mitigate the risk as best I possibly could. And I don't take big risk, even though everything, like I said, is a risk. Because as a business owner, if you get involved in this, you just want to understand what the risks are, who the operator is, and how they're protecting you. So this is some of the things we do. This is our rehab evaluator estimator. Okay. So we also I work with a team of realtors on any property that I work with. So you can either ask for them to go get an appraisal, which in my business, I really don't have to do appraisals much anymore because I have licensed professional realtors in every market that I do business in. Before I touch a property, I want to know what that property is worth in the current condition and what that property is worth fixed up. That's very important. That's what they call after repair value, because that's what shows you as the private lender how you would get your money back should they not pay you. Okay. And some of the best things that could happen is I don't pay my private lender back and they take a property that's worth a lot more than they lent me. Okay. So here's, for an example, some previous projects we've done. Okay. We bought this property for $107,000. We put $32,000 into it and we sold it for $209,000. So you can see, even if the private lender lent us $140,000, they would be in great shape if we didn't pay them back because they would have sold the property for $209,000. Okay. Some of the work we've done, just some basic pictures. We do very high-end rehabs, and that's how we protect our private lenders. Okay. We also give loan applications on every property. And what those loan applications show you is that it gives you all our information. So you don't have to go chasing for our names, our addresses, our social security numbers, or our LLC docs, the value of the property. It gives you a breakdown of everything we do on a property, so you don't have to ask questions. Now, in my business, I have a lot of people that ask me for private money. And constantly I'm going out and I'm asking them, okay, what's the property address? How much is it worth? What is the scope of work? What does the rehab schedule look like? Okay, what is your plan with this? What happens if it doesn't sell? How many people are in that market? Oh, it's a rental. What jobs are in that area? How are people going to rent it? Because if we're in a rural area with 3,000 people in a community, it's probably going to be a tough time renting it. Oh, if they say it's a short-term rental, we're going to Airbnb this. Well, what happens if the government comes in and changes the laws and you can no longer Airbnb this? So these are just kind of some of the things we look at and when we protect our private lenders with, and this is what we present to you. Now, I'm sure you're pretty cool if I present that to you. Hey guys, stay tuned because I promise I'm going to give you something pretty good for free. I'm not going to charge you anything for free. I want you guys to have something pretty good to protect yourself. Okay. So part of the loan application, this is what we call a 1003 loan application. Oh, I'm sorry. I'm going the wrong way. Okay. We also have our licensed contractors estimate. We send everything as a licensed contractor and a draw schedule. So we want to make sure the draw schedule is the thing for us we look for is our draw schedule. We want to make sure that it's protected. It's not top heavy. So if it's a $50,000 rehab on a property, we don't take $40,000 on the first draw and then $10,000 at the end. Because if somebody runs away with that money, we have no way to finish the project. God forbid something happens to us and we pass away. We want to make sure you have the money to finish the project. Because once again, for us, it's all about protecting our private lenders, not protecting ourselves. Okay. So return on investment, how much are you going to make on these properties? That's what a lot of people want to know. Generally, that you see about a 6 to 8% return, sometimes 9 or 10%, depending on the deal. Okay. When you start getting to these high interest rate returns, there's a big risk involved. And I do not like to take those risks. So for me, I don't do deals like that. I'm very comfortable knowing that I can always pay my investors from a 6 to 9, 10% return, depending on the deal, depending on how much they invest. Okay. Start to finish, it generally takes 6 months to a year, but it could be paid off early. Okay. I always have that ability to pay it off early. Now, I have some private lenders that have money in 401ks, self-directed IRAs, Coverdell accounts, health savings accounts. They don't need their money back right away. So we borrow their money sometimes for 3 to 5 years. Okay. We work with our current lenders over and over again. So we try to keep the money in play all the time. We have to pay you back after a project is done, but then we work with you next to put your money into a new deal before we actually go out there and raise money from someone else. The other thing we do is we cover all closing costs and transaction fees. So when we teach you how to set up a self-directed IRA or solo 401k to fund a deal, there's small transaction fees. It could be $100 to $300. We don't believe you should pay that. We cover that as well for our private lenders. Okay. So what do we do? How do we protect your investment? Some of the things we do is a private money executive summary. We send out to our private lenders, potential private lenders, and here's our deal. This is the breakdown of our deal. This is what we're going to use the money for. This is our plan. Do you want to lend on this deal? Now, we don't openly market to anybody. We have to have a relationship with you to work with you. Now, we talk about 5 docs that we like to give, okay? We record a mortgage on every property. So you have a first position mortgage on every property. We do a promissory note. The note spells out how much you lent us, what the interest rate is, when you're going to get paid back, what happens if we pay late, so on and so forth. Then we're always willing to personally guarantee any loan we take. Why? It's because we're not going to put our money behind something that we don't personally guarantee ourselves. So I would expect you to. And I always do the same thing. I always tell people, if you're not willing to personally guarantee this, then why would I personally guarantee it? Okay. Confession of judgment. So there's not a long drawn out battle to fight us in court to put a judgment against us should we not pay. Okay. And then if we have this property as a rental property, we do an assignment of rent. If we don't pay you, the rent that starts going within the 30 days, you file this in court and rent starts going to you. Once again, we do this to protect our private lenders. Okay. We want to make sure, God forbid something happens, that at least our private lenders got their money back and they're taken care of. They're not losing money. Okay. So the things we do before we even get involved in an investment is we do a detailed scope of work. Okay. So anyone you lend the money, that you want a scope of work and a draw schedule. Like I said, you want to make sure that the work on the property is ample to what you're looking to do. And also it's not top heavy. You're not getting all the money off, giving all the money up front and nothing at the end until you trust. Listen, I have private lenders that trust me. They fund the whole thing. They don't care. But I'm talking about new investors that you don't trust and you don't know yet. You're getting to know. That's kind of what you should expect. You also want to make sure that the contractors they're using are licensed and insured. With your name as a lost payee, God forbid something happens, you're covered. You don't want a contractor falling in the house that you lent money on and they now own the house. Okay. We also tell people, are we good with putting your name on the homeowner's insurance? God forbid there's a fire or something happens, you're paid off before we make any money. Are you okay with that? I think most private lenders are pretty happy with that we protect their investment. Okay. So guys, once again, they talked about my best-selling book. You can grab the code here for the best-selling book. I don't know if you can see it there. I'm gonna have to go a little smaller. But then once again, Pass It to Prosperous. It's best-selling book on there. And here's a copy of my cheat sheet. Okay. So the benefits of becoming the bank as a private lender. I'm going to give you a free cheat sheet. I wrote this up. It's about a 20-something page PDF on why being the bank of a private lender is so important. And it'll talk about all your tax savings you can get. Okay. How you can lend money, how you use your business to set up a solo 401k, Coverdell, how you pay your kids, all the ways you can lend money as a private lender, become a bank. So once again, guys, I just want to thank you for taking the time and listening. And I'm hoping this was a powerful, eye-opening presentation for you on how you can turn around and become a private lender and use tax savings to do this as a business owner. And I'm here to open up any questions you guys have. And you go from there.
Awesome. Well, thank you very much. We really did find some insightful information from the resources that you shared. I want to point out that the The resources that you have available will also be available as well as part of this episode. We'll make sure that they're attached to any links that are around the segment so that you can access them, and we'll make sure they're full.
Yeah, you can get them in the show notes. Will be so wherever you picked up this episode, whether you're watching us live here on the virtual summit or any of the replays, we'll make sure that those resources are available for everyone. So, Dan, one of the questions that I think a lot of our business owners are going to have, especially if they're a little bit newer, is, well, how much money do I really need to get started in doing this type of investment and kind of putting this aside for the future?
Well, that's a great question, Chuck. And what's so important is we always work with business owners, and we first get to their goals, right? What is their vision? And a lot of them talk about like, well, I want to do this because I want to save on taxes. And they might not have a solo 401k set up yet, or they have kids and they might not be paying their kids tax-free. So I have some people that start paying their kids tax-free and putting that money into a Roth IRA and a Coverdell account. And they start with as little as, they could start with as little as $20,000 and set that up, because you could pay your kids tax-free under 18 years old. You have to look at the tax code. I'm not an accountant, I'm not an attorney, so I want you to read that and understand how you pay your kids tax-free. But then you could add that money into a Roth IRA for the kids, because now they're employed by you. And you could also start a Coverdell, which works as like a 529 plan, but allows you to self-direct and invest in real estate deals, private lending, so on and so forth. So I've had people come to me with $5,000, $10,000, $20,000, and they want to lend on deals. So think about it. If I buy a property for $60,000 for, let's say, and I only have a $20,000 rehab, well, you might be able to be a second position on a $20,000 rehab with that money. Or you might be able to buy some of my note payments, which is called a partial. So if I have a seller finance note and I'm holding a note for somebody for 30 years, you might turn around and buy 15, 20 payments from me. And after that 20th payment, it comes back to me. But now you got your return on investment, your 6 to 10%, whatever that may be, return on investment that you negotiate. So I hope that makes sense. That you're never too small to start.
Yeah, I think that's important for folks to understand, that they don't necessarily have to fund the full first position for the acquisition, that there are additional opportunities here for them to participate in this type of deal and structure without having to come up with that large initial purchase, that they could take, maybe a partial on the rehab or fund the rehab. I think that's an important point, because I think a lot of entrepreneurs and small business owners thinks, well, I don't have that much cash saved around, so I can't get into real estate yet. And I know, you and I have talked extensively, real estate has become a very big part of my personal portfolio. Every time somebody asks me about crypto and coins, I was like, I'm sticking with dirt. I'm like, because we ain't making any more dirt. So that's
touch and feel it.
Yeah, exactly. I want to go knock on that front door.
But that's a great point that you brought up too, Chuck. I'm just going to say this. A lot of business owners that I work with, and I work with a lot of professionals, especially in the healthcare. I work with a lot of dentists, physical therapists, chiropractors for some reason. But I work with a lot of business owners like at Chambers, and they just don't understand that you don't really understand, you don't really need that cash. You have it, but you're paying it to the government, right? Because you might not have an aggressive enough, and I don't want to say aggressive enough in that bad term, but CPA. They just like to do the basic, put numbers in a system, see what spits out. But if you don't have a CPA coming up with a plan, there's a difference between tax filing and tax planning. Now, I'm as crazy as I read the tax code. I study that like there's no tomorrow. I teach accountants what I do so they can start utilizing this for their clients. And most people aren't doing things like solo 401ks. They're not doing infinite banking insurance policies. They're not doing paying their kids. They're not investing as a general partner and accelerating depreciation so they could take a loss on their personal returns. They're just paying taxes on their net income in their business. So they think, okay, I make $300,000 in my business a year. I don't have cash. But what if you could lower your tax basis down $150,000, and now instead of giving the tax to the government, you now can invest in real estate in your solo 401k with checkbook control potentially. So you have to educate them, and that's why I love doing this. And that's why when you asked me to be on, I was honored to be on with you, knowing your success in business. And I said, if we could just teach people and open their eyes, and I just want to open their eyes. I'm not charging them for anything. Just open your eyes that you need to take control of your finances, and you think you need to have the money, but most people don't understand They have the money. They're just allocating it the wrong way.
I think it's also worth noting that even if you don't have this large amount of cash up front, it's about strategy and making these small investments for a long-term vision to help you get to where you want to be down the road. It's not the immediate payout or the immediate reward that you're looking for. It's these small, incremental, and consistent investments that are allowing you to save on taxes, but also really make a strategy and pave the road to eternal wealth in the long-term view. And as a business owner, it's sometimes really difficult to see the long-term vision because we're always living this day to day. We're making quick decisions and making a lot of, I would say, short-term strategic decisions. But the investments go a long way, especially with consistently doing this on a consistent basis from year to year.
It's true. I would tell you what, 33 years ago, I started this business. I never thought 33 years would come. But yeah, Chuck will tell you, like, we're not 21 years old. I mean, I'm 25. I don't know how old he is. Where it creeps up on you, 30 years. They said just the basic rule of seven, right? Rule of sevens. If people understand how the rule of sevens work and that your money will double every 7 years at 7% straight, the bare basic, I just worked with a family last week, and the person started working 26 years old, and the wife is 24. And I showed them if they start putting away $100 a week right now, how much more money they would have by the time they retired than if they wait till they're 35 years old. And they were literally losing over $300,000 by not putting money away today and waiting till they're 35 years old, $100 a week. I mean, it was crazy. It was absolutely insane. So start today. I have my kids doing it. And my kids went to school. My third one is in school now, a sophomore in college. Not one of them, I mean, they're not getting full scholarships, and not any of them did. And they don't have any student loans at all because of what we've done for them. So, I mean, think about stuff like that. And I always tell people, like, the 529 plan, I don't know if you could save enough money in a 529 plan to actually pay for what college costs are going to be one day. And
True.
Not that I'm pushing college on anyone, but what I'm saying is give your kids the opportunity, or give yourself the opportunity, and plan accordingly. Like, look, 59 and a half comes very quick. God willing, we get there. It comes very quick.
It's closer for some of us than other ones. But Dan, how does
like 35 years to go, Chuck?
So how does the turmoil and the interest rates that we're seeing, and the uncertainty that a lot of people are feeling in the real estate market, how does that really impact this strategy? I know you mentioned you've come through a couple of crashes, but kind of looking today forward, what's your sense of the opportunity in the marketplace?
When the interest rates are up like this, my opportunity is even greater. Right? I love the interest rates being like this because I turn around and I create seller finance notes, right? So I raise private money to buy distressed properties, totally fix them up, make them the turnkey rental properties, and I sell them to investors that want to own rental properties, and I hold seller financing for them. So I become the bank. So not only do I raise money, but I also lend money. So when the interest rates were 2% and 3%, everybody would refinance and pay me off, right? Now interest rates are in the, for investors are 7s and 8s. So when they're paying me 9.99 to 11.99%, and I'm giving them a 30-year loan, they're not paying me off so quick. So it allows me to stay in a deal a lot longer, and it allows me to take care of my private lender way greater. So interest rates, here's what happens with interest rates. Everything's based on payments. And what's happening is, people saw, and I can mention it because it's public, Silicon Valley Bank, people thought their money was safe in a bank. Your money is anything but safe in a bank, okay? If you understand how FDIC insurance works and you understand how banking system works, at any given time, they can take your money and they can give you an IOU, right? Try to go to the bank today and take out $5,000 cash, see what happens, okay? So is your money really safe in the bank? Okay, so here, I like hard assets. Like you mentioned, the crypto, and I'm not going to get into the crypto game because I have friends that made a lot of money in that. I just don't have the guts to put everything on the line for something that's not tangible. And for me to make money on crypto, you got to lose money on crypto. So I like hard assets, right? So it's all based on payment, right? So, here's what's happening too in the real estate market. With banks tightening up, I see interest rates are going to tighten up. Private money is going to be so much of a bigger demand out there because banks are already tightening up the strings, right? Lending is tightening up right now. fact, my bank called me up. They used to beg me to lend me money all the time on all my properties. And I said, well, we're holding off. We're not big on investment properties right now. So now you're based on a bank. So about 11, now it's 12 years ago, I swore I would never trust my business to a bank or a hard money lender again, because I cannot control that. I need to be able to move quick. And there's over 22 trillion, with a T, trillion dollars sitting in cash in self-directed IRAs and solo 401ks right now looking for great deals. They're just looking for great operators. They're looking for quality deals. And people are not using a bank as much anymore.
Mhm.
Okay. A lot of funds are out there right now doing exactly what I do. Exactly what I do. They're turning around and they're lending because they see that banks are having this issue. Banks are starting to claw back. Banks aren't lending. So this is becoming even more prevalent, which is why you need to take advantage of it today. You just need to learn how to get the money in an account that you could become that private lender and do it tax-free or tax deferred. I mean, there's accounts that you could set up, like a health savings account, which if you're a business owner and you don't have a health savings account, you're missing the boat tremendously. That's the only account. The money goes in tax-free and comes out tax-free. It's the only investment vehicle there is in the world that does that. There's none other. There are some that are deferred, like a Roth IRA. You defer, you tax-free up front. I mean, there's no tax-free up front, I'm sorry. And it's tax-free coming out. A traditional IRA, tax-free up front, but you pay taxes later on.
Yep.
Right.
Okay, solo 401k works the same way. But the health savings account is the only account that you put the money in tax-free going in. Let's say you put $7,000 in going in and it turns into $100,000, that comes out tax-free. So why wouldn't you do that instead of paying that? That is wiped off your gross income before you pay taxes. And once again, check with your accountant. But even I always tell people, trust and verify everything I tell you. Just go do a basic Google search on the tax code and look up health savings accounts, tax code on that. Look up IRAs, 401ks, Coverdell's, how much you can pay your kids under 18 years old tax-free. Look up IULs, whole life insurance policies. Learn how to become your own bank. Okay, that's the Rockefeller theory. Once you learn all these things, you start learning how to get money into tax deferred or tax-free accounts that now you can use to become the bank and lend and grow those. So when you're 59 and a half, or use your current cash now. You can use your current cash now and make better than average returns. I mean, let's be honest. What is the bank paying right now in interest, Chuck?
Oh, nothing. You know, you're losing money if you're sitting on cash in a bank today. Between inflation.
Inflation better than average returns backed by real estate. So there's no guarantees, but if you don't get paid, you own that property. You can take that property. Why would you let money sit in cash in a checking account? All right. Wouldn't you like to get that mailbox money, those payments coming in every month or every quarter or at the end of a deal? I mean, that's what I want to be. I want to be the bank. I want to live with passive income. But as a business owner, I'm looking for to me, income is made on investments, but wealth is made on tax savings.
Great insight. One question I have as well when you were going through your presentation that came to mind was the misconceptions that revolve around making smart financial decisions as a business owner. I've learned this personally, but I think it's a very big unknown with how much time it really does take out of your day, out of your week, out of your month, out of your year, out of your life with trying to make smart financial decisions, right? Investing in doing the research and finding the correct investment strategies. There's tons out there and everybody has different strategies, but I think it becomes really difficult to know like how much time consumption it really takes to find those strategies. How much time and effort does your team put into finding the right properties, doing the research around the right investment strategies, and then moving forward with that to make sure that it's a legitimate source of gaining wealth and a real investment strategy that you're going to move forward with that's profitable?
Well, that's a great question. We put a tremendous amount of time up front before we invest in any property, but we're active investors. Most business owners that are listening are probably not active investors. They're running their business, right? They're plumbers, they're roofers, they're doctors, whatever it might be they're in. They don't want to do all that work. So that's why they like operators like us or people we bring in our mix, in our group, and we say, okay, these are good operators. We vet them very strong. So we spend a tremendous amount of time. But you're right. There are plentiful great investments out there. But what you have to understand is, what is your vision? Why are you an investor? Right? So years ago, I used to fix and flip a lot of properties. I was doing 40, 50 properties a year, making $50,000 to $80,000 per property, sometimes over $100,000 a property. I was very transactional. I was doing it to buy all the things that everyone thought were successful: cars, boats, watch collection. I did it for the wrong reasons, right? So I was making multiple seven figures a year, very transactional. I didn't want to be transactional. So I had to flip into private lending. I had to flip into seller financing and become the bank. I had to flip into rental properties in great emerging markets. And I don't live in the best emerging market for rental properties, so I invest outside my market. So I spend a lot of time building my teams in those markets. So I help people that want to buy properties in those markets, right? So I deal with asset managers. I deal with owners, sellers. I deal with what they call wholesalers selling me properties. I sometimes deal with realtors. But I get a lot of my properties because I have a relationship with the banks that take these properties as non-performing properties or non-performing mortgages. And I buy those. I get them totally fixed up with my team. I have a property manager that puts a tenant in there and manages it professionally. And then I sell it off to somebody who wants to own a rental property. Okay. And to build, that's what I call build legacy wealth for your family. 10, 15, 20 years down the road, now you have 10, 20, 30 properties that are paid off potentially. And now you're truly a millionaire. You're truly a millionaire. If the property doesn't go up, if you buy a property for $100,000 and pay it off in 10 years, and it doesn't go up $1 in 10 years, and the rent doesn't go up $1 in 10 years, it just covers itself, you'd have $1 million, right?
Yeah.
Now, if you did 10 of those, but we know if history repeats itself, real estate goes up on average about 6% a year. Rents go up about 3 to 5% a year. Plus, you get all the tax benefits owning real estate. See, owning real estate is a phenomenal tax strategy. You could depreciate the asset. You have interest write-off. You have debt reduction. There's so many quadrants to owning real estate that's important. But when you ask this question, there are a ton of ways to invest in real estate. Okay, but do you want to be a transactional investor, or do you want to be a passive investor? Okay, and if you want to be a passive investor, you either become a private lender or you own rental real estate. And what type of rental real estate are you okay owning? Okay, so if you're in a market that's a good market to own real estate, are you able to find those properties, or do you work with a company like that helps you find those? Now, do you have to buy those on seller financing, or you could buy in cash? You could do them either way. Most people like myself will not sell a property on seller financing because they want all their money up front. I don't need the money up front. I like passive income. I like mailbox money. When you make $600 to $3,000 a month per property and you do a couple of hundred of those, it adds up pretty nice. You don't have to worry about what happens in the economy.
Yeah. Great insight. Thank you for that.
So one of the things that I know we're hearing a lot about, if you pay any attention to the real estate space, and I know I was kind of late to the game, but within the last probably 5 or 6 years, that's become kind of a very big part of my strategy going forward. You're hearing about all this big private equity money that's flooding into these markets. How does a smaller operator like yourself, or even an individual, how do we compete and how do we find those great deals with so much big corporate money in the marketplace?
That's excellent. Yeah, you do have that, and the reason why is they're in the marketplace is because they're blending their averages. Okay, these funds like your BlackRocks and stuff like that, they're blending their averages. So they don't need to make the kind of returns you need to make. They're okay making 2 to 4% yield on their money. So you got to understand that, why they buy what they buy. But if you're an active investor, once again, it goes back to your vision. What is your ultimate goal? Okay, are you looking to be an active investor? You go out and find these properties with some fat in the deal, and you do the rehab yourself, and you get them managed and rented. Well, then you can start knocking on doors. You can start calling the asset managers at the small local banks, and you can start talking to them. I'm an asset manager. I own over 600 assets. So you call people like me and you ask, hey, am I willing to sell anything? Most of the time I'm not, because I'm not transactional. But every once in a while I'll sell off some to recapitalize and put the money to use somewhere else. That's how you do it. Or you start getting with wholesalers, you start getting with realtors, you build a relationship. It's all about relationship building. You have to build relationships, right? You look out for other people and they're going to look out for you. If you're have this whiff attitude, what's in it for me, and you need to make all the money, you're not going to do any business at all. So I get a lot, like that's why I deal with a lot of the medical professionals. They're not into going out and calling asset managers. They're not into calling realtors. They're not into knocking on doors. They're not into dealing with wholesalers. They're not into driving properties. So they come to me and they said, listen, we have about $500,000 or $200,000. What can we do with it? And we want to invest this much money per year to buy properties. What can we do with it? So we say, okay, what's your goal? Some of them say, well, I need to make cash flow every month. We just had a guy yesterday we got on the phone with. He sold out his company to retire and he wants to live on the cash flow. It's his retirement. So he wants cash flow. Some of them say, I can care less about cash flow. I want to build up a portfolio for the next 10 to 15 years and I want to sell it, sell my practice and basically live off this. This is my legacy. So you work with companies. There are some great companies out there. And I mean, there's companies besides me. I'm not a big company. I almost work on relationships. If you come to me and say, hey, I want a property, I'll go through what we do and I'll go out shopping for you at that point, right? I don't buy the properties and try to offsell them because I don't want to own those properties myself. My rental portfolio
Makes sense.
now, but I like those properties, create seller finance notes for me.
Right.
Okay.
So one other kind of question, opportunity, and kind of personal confession. I've been in this situation myself, and I know we've chatted about it in the past, but I think it might be a situation a lot of folks could potentially find themselves into. So it is not uncommon for people to get bitten by the real estate bug and decide, you know what, I'm going to buy, fix, and flip, or buy, fix, and rent my property myself. What solutions, do you see or offer somebody that kind of took a bite bigger than they can actually chew, that finds themselves maybe in a situation where they've got a project partially completed and they were like, man, this is way more work than it looks like on the TV.
I love you said that.
I can't fix this in 20 minutes. Come on. They do it every week.
No, this is not a get rich quick. I was asked twice to be on 2 TV shows. I probably shouldn't even mention them here. And my lawyer opted for me not to be on them. The way you make it sound. And one of the reasons is, I'll tell you what, they would not let us put all our closing costs from the HUD on TV because they said the sponsors wouldn't approve of, they wouldn't want that on there. Right. So you're not buying our property for $100,000, put $50,000 into it, selling it for $200,000 and making a $50,000 profit. That's not what happens. It's not real world. I wish it was. It's just not. So yeah, if you run into that problem, I mean, let's avoid that problem in the future. But now you already ran into this problem, okay? And some of the ways to avoid that is exactly what I talked about in my presentation. Is talking about scopes of work and draw a schedule, right? And if you don't know what you're doing, hire somebody even like myself in an area that you're in. Find somebody that's done this. And say, listen, I'll give you a percentage of the project and I'll pay you along the way to be my project manager and consult with me, right? Don't try to go at this alone. There's so many people in the industry that know what they're doing. There's so many that don't, but verify them, trust and verify. It's very easy to do checks on people like myself or everybody else and say, have you done this before? Can you help me? If you're in that situation now, even if you're going to lose money, it's okay, to lose your money. It's education. But there's opportunity cost, right? You're already in this situation. There's opportunity cost, right? You need to get out of this deal and move on and get it on the next one, right? Just make sure if you borrowed money, you do everything in your power. I don't care if you have to withdraw your 401k and sell it off and take a hit. You pay your private lenders back because you will so you get a 10% hit. If you pay your private lenders back, they will fund every deal you ever do in your life. If you're honest with them and you communicate with them and you don't hide from them, all right, you let them know what's going on, they will fund every deal you ever do. But you lose their money one time, and they will never do anything with you again. They'll tell everyone they know how terrible you are. So that's so important. But if you're in a situation like that now, whatever area you're located in, find somebody that's really good at what you do and bring it to them and say, listen, I need help on this deal. I'm willing to pay you because there's no money to make. I'm going to pay you to help me get out of this. Let's get out of this. I'm willing to take a loss, whatever I have to take to move on. And I'll make it. You might lose $10,000, $20,000 on this deal, but you'll make $100,000 on the next deal. Right. So understand that people are so tight on every single deal. They have to squeeze every single deal to make as much as they can make rather than saying, okay, listen, my opportunity cost, if I pull out of this deal, I can move into the next one. And every month I can move quicker. That money is diminished on how much I lost.
Yeah. I like that you said that if you are in this situation already, and you are potentially losing money, like it is okay because there's value in it being educated around the process. I'm sure you won't do that again because you've learned that this result isn't something that is satisfying. But before you get into a circumstance like that, get with Dan or someone that is an expert in this industry, because it can save you from that and going down the wrong path. But really appreciate your insight today on everything that you have to offer, because we can tell that you're an expert. You've been doing this for so long, and you have all of the resources, and you've seen things from different angles. And I think that's a lot of investing, is seeing things that have happened before, going through economic transitions and experiencing these ups and downs of just the economy, but then looking at all of the different valuable investment strategies that are out there and finding what is working in today's world, but what has been working in the past, and looking at these historical trends that allow you to see what are smart decisions to make with your money as a business owner, and how to strategically place yourself in the best position, not only for today, for savings, but in the long haul and down the road for the future value of whatever investment strategy that you're looking towards creating for you, but aligning that with your values, which I thought was very insightful. So you answered all of my questions today. Chuck, do you have any other questions?
Yeah, it's great, Dan. I appreciate you joining us for the Small Biz Summit. We'll make sure that all the resources you've been so generous to offer are in our show notes, and that make sure that everybody has your socials and contacts. And that's one of the nice things about social media now is, when you talk about vetting people, it's so much easier today than it was, even 10 or 15 years ago. So Dan, if you had that one big thing that you wanted everybody to remember about our time today, what would that be?
The most important thing, and I tell this all the time, is we talked about it before, timeline, right? It comes. Think about with the end in mind. What do you want to get? What is your goal? And what is your vision? What is your vision? Why are you doing what you do? And then work backwards. Don't work south to north, work north to south. All right. And figure out a vision and just break it apart and figure out how you're going to get there, and put the right team in place, and just stay consistent. Don't chase that shiny object. It's very easy in this social media world to chase shiny objects. Just stick with your vision. Like for me, my vision is doing what I want, when I want, with whom I want. So I need that passive income. So anything else that hits my desk that doesn't look like that, I just move away from.
That's so important. So again, thanks, Dan, for taking the time to join us. We'll make sure all your contact information there. And I think that's a wrap for this episode.
That is. Thank you for your time today.
Thanks, Dan.
Thanks for having me on. Guys. I loved it.